Thank you for taking the time to stop looking at your Xbox or TikTok Reels to check out this video and how you can make 200 George Washingtons a day. What's up all you beautiful people, it's Justin here. This is part 1 of the video series how I make $200 per day, 95% passively, 365 days per year. In this part, we're going to go over the strategy I'm currently using to make this happen, and then we'll go over questions you probably have about it so you can see if it's something you like to implement for yourself. So the strategy I'm using is called house hacking. Yes, this has nothing to do with hacking on a computer or breaking into servers to steal passwords or anything like that. You're welcome. I have done house hacking 2 times, and this is the second time / second experiment. This time around, I planned on doing house hacking for 24 months with a new type of house to see what I would learn, and here are the results so far. As of shooting this video, I have just completed month 19 out of month 24 in this house hacking experiment, which leaves about 4 months remaining. So what do I mean by that? For the second test, I wanted to try house hacking for exactly 24 months with a single family home where I live in the same residence as the tenants, or in this case, roommates or room renters. My logic was that I didn't want to live in one half of a duplex with 1 bed, 1 bathroom type of setup, despite the fact that it would give me some privacy and noise control among a few other conveniences. Also, duplexes are a bit tougher to buy because they are generally a hot item that other investors want to own as well. So I figured if I gave up some privacy and some other conveniences, I would gain some new benefits. And so far, it turns out I was right. In exchange for not buying a multifamily unit, which would have given me more privacy and control over the noise and cleanliness of the common areas, I get a much nicer house and overall common spaces and common areas, and plus, I wouldn't have to compete with other people in Phoenix, Arizona trying to do a house hacking with a multifamily duplex setup. The catch, of course, would be that I'd have to share the spaces and be a bit more flexible because of the habits, tendencies, and schedules of the other people using them, right? So as of today, I'm 29 and I did my first house hacking experiment back when I was 25 in March of 2017 when I purchased my first house for $350 grand on the north side of Phoenix, Arizona. The first property had only 3 bedrooms and 2.5 bathrooms, and I rented out 2 of the rooms for $800 each, providing me with $1,600 per month in rental income to offset the mortgage and other expenses, and I lived in the master bedroom and had my own private plane. Just kidding. My own private bathroom, which is always a must for me with this type of strategy. So I ended up selling that house because I wanted to move myself, my business, and all of my other assets offshore to legally reduce my future tax liability. Because that year I wound up paying a 6-figure tax bill for my consulting business. However, I ended up changing my mind and coming back to the United States because my circumstances changed and my priorities with it. So I moved back to Phoenix, Arizona. That's another way of saying I was being a bit indecisive and wanted 2 things that were in direct conflict with one another, but I ironed things out since then. Look at me go. So the next house I purchased when I was 27. And this house has 4 bedrooms and 3 full bathrooms and a den, which I converted into a 5th bedroom, which gave me 4 available spaces to consider to rent to people. So currently in this house, I live in the master bedroom and I have my own private bathroom again. And this time I rent out the other 4 rooms at $750 per room, and I collect $3,000 per month in rent, which not only offsets my cost, I'm basically living for free as a result. So let's talk numbers. First off, why is this house hacking strategy 95% passive and not 100%? The 5% where you actually have to do stuff is where you actually have to post some ads and then talk to and screen tenants and make a decision about who you want to live with. You also need to create a lease for each room renter to sign, and it's best to include the house rules and expectations in this lease to not only make your new person aware of these rules, but to also have him or her sign off on them before they move into the room. This is important so you don't have to retrain everyone about how things should go when they live in your house over and over again. Also, if you could violently click the like button just one time to help out the channel and also get some positive karma points, that would be outstanding. Thank you. That girl you have a crush on that you haven't talked to, yeah, she's going to talk to you. And she's going to like you if you just hit the like button right about now. That's karma, baby. Okay, so let's talk numbers. Here's the current expenses associated with my current house, which is a 5-bedroom, 3-bathroom house. So the mortgage is $1,792 per month. Water, sewer, trash, utilities is $235. Gigablast internet 160. Solar panels 111. Repairs allocation 100. Electric and cleaner bills 100 each. HOA 82. Landscaper 80. Home warranty 72. Nest cams 18. Pest control 16. Simply Safe 15. SL warranties 12. Ring.com 3. All in all, $28.96 a month for round up $3,000 a month for rent. So by these numbers, on most months, I am living for free and with a $104 surplus. However, the electric bill, utilities bill, or repair bill could be a bit higher on a given month, thus making me break even or having to spend a few extra bucks to live. And also, I'm not taking into account the federal and state income taxes on the $3,000 in rental income in this example, so I figured I'd just leave it a little less complicated and explain it to you more simply. But after the income taxes on that rental income, I'd no longer be at that $104 per month surplus, obviously. So the surprising truth is that if I was living here by myself only, these bills would not go down by very much. Pretty much everything on that list would stay the same. Maybe I'd use less water and also not need the unlimited internet plan, which would lower my internet bill, but more or less the house is in total cost about $2,800 to $3,000 a month when all is said and done. The current LTV on the home is about 75%, which means I own 25% of the home and have a mortgage on the other 75%, so I don't have to pay PMI, which stands for private mortgage insurance, which is an extra expense that you don't have to pay if you put down, you do have to pay if you put down less than 20% on the home when you go to buy it, which usually ranges between $100 to $150 per month, depending upon the size of the loan you need when you go to buy the home, your credit score, and the lender in question. So here's what's interesting. When I was renting penthouses in my early 20s, be sure to check out those 2 penthouse tour videos. I was paying anywhere from $3,200 to $4,500 per month in rent, and I was losing that money entirely except for the home office tax deduction and a few other legitimate tax write-offs, which compared to these house hacking numbers are just laughable. Before, I was paying around $4,500 per month for a penthouse, and after tax write-offs, that number probably could have gotten down to maybe $4,100 per month, because a $1,200 tax write-off equates to about a $400 tax credit if we were looking at it from a 33% tax bracket perspective. But that still means on day one of each and every month of the year, I'd start out at minus $4,100, including the $1,200 worth of tax write-offs. And with this house hacking experiment, I'm actually only losing a little bit of money on day one of each month. That's a $4,100 difference and increase in savings every 30 days. That's pretty crazy, right? Also, here's some key information about how I'm actually making the $200 per day, 95% passively. So before we looked at the cost breakdown of the house, which came at $28.96 a month, but we can just round up and say it's about $3,000 a month. So here's the breakdown of the $200 per day in daily income. And in parentheses, I explain what it is. So the mortgage, $560 goes to principal. The interest tax credit is $303. The rent is $3,000 per month, $100 a day. Appreciation, I put as $2,200 per month on average, although it's been going up way more than that, so it's pretty conservative. Home office tax deduction, $30. Property taxes, tax deduction, $66. So the daily passive liquid income is $100 a day from the rent. The daily passive equity increase is $92 from the mortgage principal payoff and the appreciation gains. The daily tax savings from this setup is $13 from interest, home office, and property tax deductions. The total daily cash value of doing this is $205 per day. Pretty cool. Here's another way to look at this too, since we reasoned the cost of the house is about $3,000 per month, and I'm gaining roughly $6,000 per month between rental income, equity increases from appreciation, principal payoff, and tax savings. I am basically getting paid $3,000 per month instead of losing $4,100 per month on a penthouse, which is a $7,100 per month difference in net worth increase, which is an extra $85,200 per year increase in net worth. Not bad, right? Here's another cool fun fact. The equity gains from the principal payoff and appreciation can be cashed out completely tax-free later if I decide to sell the house 24 months after buying it. So for example, if I wanted to hypothetically sell this house in 4 months, which would bring my total time here in this house to 24 months, I'd be able to have a $250,000 tax shield against my capital gains I may have had on the house during the previous 24 months of ownership. Well, what does that mean? Well, unmarried single people like myself don't have to pay taxes on their capital gains when they sell their homes if they've lived in it for 2 years of the last 5 years. And for married couples, it is a $500,000 tax shield because there is 2 people who are owning the home. So for example, let's say I purchase another house in the future for $350,000 and I live in it for 24 months and then I sell it for a whopping, a mind-blowing $600,000 because the market is just going absolutely banana balls, honky wonky donkey crazy. Everyone comes back from the blip after the snap, then the population doubles and there's basically nowhere to live. So the house values soar. Anyway, in this case, the $250,000 capital gain, which is the $600,000 sale price minus the $350,000 initial purchase price, would be tax-free money I get to keep before taking into account the cost of selling the house, which includes paying real estate agent fees and some other fees. This is true so long as you've been in the home for the last 24 months and is classified as your primary residence and not a rental. And when it's owner-occupied, like with this house hacking experiment I'm currently running, then it counts. So here's another cool benefit of doing house hacking. In my actual case, when you bring in an extra $36,000 per year in rental income, this can potentially, but not always, increase your adjusted gross income on your 1040 individual income tax return, which can lower your debt to income ratio, which is a number expressed as a percentage that you need to use to qualify for when you're about to get a mortgage on a home or as a rental or an investment or another loan product. So more on DTI, which stands for debt to income ratios, later, and how you can get this started, improving this and preparing for this so you can do this type of strategy I'm doing. However, remember this, most loan product sellers and lenders consider room rental income as something called boarding income, depending upon how you and your accountant report it on your tax return. And if it's reported as boarding income on your tax return, many times lenders will not use this income to help you qualify for a lending product like a mortgage, home equity line of credit, or home equity loan. Which is crazy, I know, but they basically ignore it as if you don't even make that income. It's nuts. So if you want to use this rental income to gain access to new loan products by lowering your debt to income ratio, consider forming a game plan with your accountant on how you can structure your tax return to better reach this outcome, factoring this assumption into play here. In my case, what I realized after a few lengthy conversations with a mortgage broker I currently work with is this. If I wanted to go ahead and buy a new primary residence and rent out my room in the current house that I'm in right now, thereby making it a full-blown rental, the bank should theoretically be able to use 75% of the $3,000 of current rent, which is $2,250, to allow me to qualify for the next mortgage on the next house, since I also have signed leases and agreements in each place for each room. In part 2 of this series, which is the next video, I'm going to go over some very sweet strategies that are related to smoking the perfect steak on your current barbecuing setup. Just kidding. Sweet strategies related to this house hacking experiment, and most importantly, I'm going to share with you all the things I would have done differently if I could have done all of this over again. Because I can say with confidence, had I known some key things earlier, my real estate portfolio and overall net worth could have been at least $250,000 higher than it is right now. I will also share with you my plans on the future on whether or not I'm going to continue doing house hacking in this current way, where I get upgraded common areas and spaces in exchange for the inconveniences of living directly with other people. And I'm going to show you how you can get qualified for your first real estate investment / house purchase, and walk you through the numbers you'll need to have before looking for a house that is suitable to do this with, my friend. And more great stuff, so be sure not to miss out. If you enjoyed this video, please take a moment to smash or choke slam or suplex that like button, and subscribe to the channel and hit the bell to turn on the notifications to get a reminder each and every time I create and upload a new video. Also, I don't just make videos on house hacking experiments, so be sure to check out the other videos on the channel that'll show you how to do other cool stuff. All right, thanks for that. You're a rock star. I'll see you on the next video, my friend. Bye for now.